I'm starting to get bearish on the big tech sector, so stay tuned to find out why. First up, let's take a look at a daily chart of the NASDAQ 100 triple Qs. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we will be starting with the NASDAQ 100 triple Qs because this is the sector that has been leading the charge higher in this current bull trend. The big tech companies are on absolute fire and they carry the majority of the weight in the NASDAQ 100 and the SPY ETF. And as you can tell from today's price action, we had a very bullish breakout and it's still happening on very high volume. Now, with that being said, I am starting to get bearish at these prices and I'm going to now talk about exactly why. So first and foremost, I brought back this beautiful picture of the big brain bear, which if you were following me for any amount of time last year, you are very accustomed to seeing this beautiful face. This is the big brain bear that knows exactly when to short the market, and this is not one of those soft teddy bears that constantly says the market's going to crash each and every day just because we get a green candlestick. There have been plenty of bears calling for a crash and plenty of bearish sentiment all year long, yet the market continues to climb the wall of worry, and I'm telling you right now that could be close to an end, and this could be the real deal time to start getting bearish. So now let's start talking about the reasons why you need to be cautious going into the next week. And the first reason is simply because we have gone way too far, way too fast. If you look at this chart, things are starting to look very parabolic. And the last time we saw this happening was back here on February 2nd. And as you can tell, that did lead to a little bit of a blow off top look and a month-long correction. I think there is a very good chance we are repeating that event because we still have way too many bears shorting this market and they have now been squeezed out of their positions, which means we have the perfect conditions to finally go through a correction. Remember, the market likes to cause maximum pain to the majority, so if the majority of retail has been bearish and shorting the triple Qs, they are now 6 feet under and they have no money left to short the market with because they've been shorting for the entire year. That is the perfect time to reverse the script and start sending us lower, and this is the perfect resistance level to do so from at an overextended condition. Now, if we got to this resistance and we were not overextended, there's a good chance we would just consolidate before breaking through it. But because we're getting overextended as we reach this very critical level, and we already know the big brain bear is just waiting at this level, there is a very good chance the bulls are going to fail at the first attempt, and we are going to start getting a pullback back down towards 337 to 339, and possibly even as low as the gap fill right around 333. This is going to be a very painful pullback if you're not prepared for it, or at least expecting the possibility of it. And there's a very good chance this parabolic rally needs to cool down. So what I want you to pay attention to over the coming weeks is the possibility that the triple Qs are going to stall out and go through a cool down from this level right around 350. We are way outside the upper Bollinger Band and we are getting very separated from all these moving averages. And this is really just a parabolic move that is likely not going much higher without a cool down. So next up, let's jump over to a weekly chart of the triple Qs, and you can see on the weekly chart, we have been bullish all year long, and I have been referencing this weekly double bottom from 260 because we had the breakout above the 290s, which confirmed we had the double bottom breakout, which is a very bullish pattern to higher prices. That's why I've been able to stay bullish all year because the chart was screaming in our face that we had a bottom and we were breaking out and going to higher prices. Then just recently, we broke out above the August highs, and if you remember back to August of last year, that was a very bearish moment where we actually thought there was the possibility the market bottomed in June, and we know that was a failed signal, and now we have this W-shaped bottom from the double bottom, and we're breaking out above the August highs, but we are running into this very critical retracement of the bear market, which is the 61.8% retracement, which is right where the bear is going to be waiting at 350. Remember, this does not guarantee the stock market is not going to go higher and eventually break this level, but because we are now outside the upper Bollinger Band on the daily chart and the weekly chart, and we're hitting this critical resistance, there's a very good chance we are even going to see the bulls starting to sell and locking in profit. At the same exact time, we're going to have the big brain bear stepping in and shorting the market to lower prices. Remember, there's the difference between smart money and dumb money has been shorting the market the entire year, and smart money has been accumulating at the lows, getting ready for this bull rally, and that smart money could now be ready to lock in their profits. Do not be part of the dumb money crowd. Look ahead and look forward, and right now, looking at this chart with the weekly overextension outside the upper Bollinger Band, it is time to get very cautious and expect significant downside if we start to see high volume selling. So as I always tell you on this channel, we follow price action and trend, and we let the price action do all the talking. And looking at this chart, we have a very strong bull trend with all of the moving averages on the weekly chart stacked to the bull side and the price action above all the moving averages. So we are not simply getting bearish just for the hell of it. We are simply managing risk right here at triple Q's levels of 350. So if you want to short the market at 350, simply manage your risk from that resistance. And if you've been holding long positions, consider locking in some of those profits and getting prepared for a downturn. If we start breaking above 350 and we get rid of these overextended conditions and the moving averages catch up and we're no longer outside the upper Bollinger Band, then we can start accumulating back into long positions with a much better risk reward ratio. Right now, it's just simply too risky to stay long at this critical level with the overextended conditions. And if you don't see the pullback coming, you can wait for confirmation with the price action on the daily chart and wait for the price action to break below a critical level. So if we go back over to the daily chart, simply manage your risk at this resistance at 350. Whether you want to short from there or not is up to you, but I would definitely be aware of the possibility that we're coming back down towards 333 or at a very minimum the breakout at 337 to 339. Now I think we're going to go much lower than that, and I think there's a better chance we come all the way back down into the 320s and possibly even close the gap at 315 and 308. If you just take a simple percent from where we closed today all the way down to the bottom of the gap fill, that is a full-blown correction of 11.5%. Anything between 10 and 15% is a completely normal stock market correction, and after such a strong bull run, it would be completely normal to see a correction of that magnitude. So quite simply said, you need to be very cautious at triple Q's levels of 350 because there's a very good chance the big brain bear is sitting right there at that level, and there's a lot of bulls preparing to lock in profits. That doesn't guarantee I'm right, and that doesn't guarantee we can't go higher. So if we start to break 350, we still have the possibility to climb to the next price target higher at 360. So also let's quickly look at some of the top 5 names in the triple Qs, and the first one that comes to mind is obviously Nvidia stock, which had an extremely bullish week after earnings and broke out to new all-time highs. So anytime we see top 5 or top 10 names breaking out to all-time highs, we have to instantly consider the possibility we're in a bull market, which means the triple Qs can continue to still push higher. Now, just looking at Nvidia's weekly chart, there is a very slim chance Nvidia continues to climb because it's way outside the upper Bollinger Band on this weekly chart. And even though that doesn't guarantee it has to go much lower, it is definitely not going much higher. It's more than likely going to start bull flagging and going into a trading range. So while Nvidia is leading the way higher, we still have to acknowledge the fact that the index is made up of more than just one company. So let's go look at another stock like Apple. All right, so the weekly chart of Apple, we've gone over this before, is clearly also looking like a bull breakout after that double correction we had last year, and we are now breaking out of the downtrending channel ever since we started to close above the 170s. So with Nvidia breaking out to all-time highs, there's a very good chance Apple stock could be next on the list, which is going to require a break above the 180s. However, that requires Apple to stay above this breakout level, and as we know, when we get breakouts, usually there's a good chance you're going to backtest that breakout before going any higher. So if we start to see Apple stock breaking down below about 170, there is a very good chance it's going back into the 160s to test this breakout level. Again, that doesn't mean it's bearish, it simply means it's retesting the breakout before it goes any higher. However, looking at the weekly chart, you can see Apple is still above all the moving averages with a bull trend, and this is the exact same setup we had in Nvidia stock when I said it was simply not worth the risk to short it. So while you need to be aware that there's risk we could be going lower, nothing on the chart says that we have to, so you need to build a trade plan around critical support levels and get more bearish if those levels break down. And then next, let's quickly jump over to Microsoft, which is actually the #1 stock in the NASDAQ 100 triple Qs. And it is also getting very close to all-time highs in the 340s, only about $10 to $15 away. But it is also looking overextended outside the weekly Bollinger Band. Now, these bands are expanding and we do have a bull trend, but there's still a very good chance we need to see a little bit of cool down before these big tech companies are going to break out to all-time highs. So what I want you to take away from this is that we have bull trends and we have the leaders that are making up these bull trends still pushing higher, which could be going to all-time highs. but you need to watch that level very closely on the triple Qs at 350. So just to summarize, we'll move back over to the triple Qs. I want you to pay very close attention to this level at 350 because we are getting overextended as we're reaching this critical resistance. Whether or not you are shorting the market from this level is 100% up to you. It is very little risk to do so as long as you understand how to manage your risk above that level if we start to break out. If you're simply holding long positions and you're getting nervous, you can always take partial profits and still leave runners, but do not completely throw away the idea that this is going to lead to a major correction or at least a sizable pullback. I'm spending extra time going over this because the big tech companies are the majority of the weight in the market, and they have been a major reason why we still have a bull trend in the S&P 500. If the big tech sector starts to roll over and die, that is going to bring a lot of downside risk in the market. So I want to make extra sure this is on your radar. We are absolutely crushing this market this year in the Stock Channel Trading Discord and also with Bank Trade Alerts. So if you still need help in this market and you want to perform better, consider checking out either of those services. In the Stock Channel Discord, you get access to all of my intraday updates and analysis, and you can trade with other price action traders. On Bank Trade Alerts, you'll get all of your buy and sell alerts via email and text message, and we only trade the ETFs TQQQ and SQQQ. You can find out how to join the Stock Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.